So today's topic is medical expenses deduction. And let me share screen with you. So that's how we share, right? We share screen, we share knowledge, we share our time, and we share fortune together, because the more we learn together, the better we do. That's really how I believe. Our economy goes that way. And so our knowledge goes that way too. We want to share our knowledge. And you know where to find us. This is our website, folks, right? And you come over here, you can see all our webinars here. And you can also come to Community CPA YouTube channel. So come over here, subscribe to our channel, and hit the little bell. So every time we put something new, you get it. Okay, now let's go to our webinar. And this is what we're going to talk about, medical expenses and deduction. Really like ordinary topic, right? It's not going to make you excited or not excited. It's something you need to know. And I do want to cover medical expenses in all angles. Like if you are, if you're doing 1040, what you need to know, and or if you are a business owner, you run a partnership, a S corporation, what do you know? So that is what I am doing here. And no responsibility disclaimer. And that is something that I always tell you. You do not want to believe everything on internet. And internet to me and to you should be for entertainment purpose only. You go on there, look at the celebrities' life and admire them or feel sorry for them. You know, it's just fun, right? But in terms of knowledge that you are gaining and you're going to do good for yourself and just be more serious, and you only want to rely on the serious sources like irs.gov, like the state website. So those are the places I look for knowledge. I don't go onto some entertainment site and to start getting their input as a real input. Don't do that to yourself. And making sure that you know who you're talking with, like Community CPA, we're a valid business on the street. You always can tie responsibility to us. And if we provided professional service and that is something you followed and done, then you know exactly where that comes from. Please don't just go on internet and blindly believe whatever quote that sounds like is what your understanding is. That's not the way to go, right? So let's get going. Standard deduction, itemized deduction. As soon as we talk about medical expenses, medical insurance, and that people immediately think of the Schedule A, standard deduction versus itemized deduction. So let's just get ourselves familiar with. We're doing 2021 tax return right now, all right? For single, it's 12,550. Married file jointly is 25,000. So it grew a little bit, right, from last year. So this is the standard deduction, which means if you cannot add up all your expenses to be more than this amount, you should stick with standardized deduction. And now, what are the itemized deduction item? When I say add them together, if they are less than 25,100, you use standard. So here, the item is medical expense, property tax, home mortgage interest, charitable donation, and those are popular items. And we're going to zoom in that medical expense to see what they are. And a lot of people don't even use that anymore because 25,100 is enough for the family. Remember, our taxes kind of eliminated. We used to be able, for the state, we pay taxes, right? We used to be able to put in all the state income tax onto Schedule A. So our itemized deduction is bigger. But now, remember President Trump eliminated that. So he said that it doesn't matter how much taxes you pay, and we're only going to give you 10,000. Our property tax is going over 10,000 already. So you really just have 10,000. There is, because of that limitation, a lot of times we all use standard deduction. Itemized deduction doesn't come into play that much anymore because of the limitation on the tax, income tax deduction, which is actually together with the property tax. That's the same session, right? The car tag and the property tax, income taxes all go there. Now, let's see. And in the inside of this itemized deduction, and we want to zoom in that medical insurance because today we talk about that, right? So medical expense, amount over 7.5% AGI. What is AGI? If you are a salary earner, let's say your W-2 is $50,000 a year. If you don't have any other income, your AGI is 50,000. And if you do 50,000 and your medical insurance, so 50,000, if we just simply take 50,000 times 0.075. So if your medical insurance is less than 3,750, it doesn't count. But if you go over $1, then you can actually start claiming that for $1, right? So that is what you want to know, a 7.5% AGI. And of course, property tax, we talked about that. And one total amount above the standard deduction, you will benefit more from the itemized deduction. Otherwise, you use standard. Let me show you the form. So this is the form, folks. Did you see that? So look at that, medical dental expenses. So this is the expenses that you paid. And for example, out of pocket and your insurance premium. And if you have no other place to deduct, then you can come over here to deduct and multiply by 7.5% of AGI, then you got 3,750. And then you will take the total minus that, then is 9,547. That's what you can deduct. You see how you cannot deduct anything under 3,750, right? Does that make sense? You see my 50, this is my W-2, and that's my AGI. I didn't have any other income, but I spent a lot of money on there. And, I had a, surgery. And so I had a whatever knee replacement, and I'm just imagining it. And that's your out-of-pocket total. Then you can deduct 9,557. But look at this. In this example, you got your taxes, and see how you added up all of these, you come up with 25,047. Let's say you are filing jointly, married file jointly. Remember that number is 25,100, remember? So are you going to use standard or are you going to use itemized? So the answer is you're going to use standard, because standard is 25,100, right? All right, if you take itemized deduction, the IRS allows all taxpayers to deduct their qualified unreimbursed medical care expense that exceeds 7.5% of their adjusted gross income. Just to recap, so you are allowed to deduct 7.5% of your AGI above that. All right. Medical expenses to use, the IRS allows you to deduct payment for insurance premiums for medical, dental, qualified long-term care, subscription, okay, acupuncture, chiropractor, all of these doctor visits, you can deduct. Medical exam, x-rays, you can deduct. Very understandable, right? So just generally medical expenses. And here, limit on long-term care premiums. So especially recent years, there's a lot of selling of long-term care package coupled with life insurance, right? And those coupled with life insurance portion need to be calculated out. You cannot use that. But for just a portion of long-term care, you see, they have a limit. They say that if you're over 71, you can deduct $5,640 total in a year. So make sure that, and when you come to this point, you have a long-term care premium, and you will know, and that deduction, because if you use TurboTax or your tax professionals, they all know. But if you use TurboTax yourself, and I think TurboTax actually has a field to have you put in your long-term care premium. And remember, when you do that, you don't want to put in your life insurance portion as well. You want to watch for that, separating them. All right, medical expense not to use, not allowed to deduct. You know, you already kind of know what they are, right? So if you have a HSA account, and you put money in there, and when you spend money, you pay that out of HSA account, that you cannot deduct again because that is already free from taxes. So when you put the money into HSA account, you did not pay income tax. Okay, I know that is processed through your payroll, but that doesn't mean you pay taxes. So make sure you know that. And life insurance, you see, life insurance, income protection policies don't qualify, cannot deduct. Expenses for cosmetic procedures. So one of my clients was asking me, what is cosmetic procedures? Because, she has all these flat moles on her hand, and it was a lot. And to remove them, do you consider that's cosmetic? Of course, it's made her hand look prettier, but it is also a really scary things to actually standing out your hand because there's so many flat moles on it, right? So that, and if you're sitting there wonder, oh, is this cosmetic procedure or this is a regular medical procedure? And one of the help you could get is actually from your doctor. And most of the cosmetics procedures are not covered by insurance. Insurance don't cover that. But if your procedure was actually covered by insurance and just about 25% didn't cover, you have to pay, then most likely you can deduct it because your insurance didn't consider that to be cosmetic. So IRS would probably agree with that too. So whenever you get into a area where you can kind of see that a part is not cosmetic, but the part is, then that's the best benchmark is with your doctor, with your insurance. All right, purchase of general health, such as toothpaste, health club dues, vitamins, and the diet food, you cannot deduct, understandable, right? Medical expenses paid in a different year just means that you can deduct in this year for this year and don't deduct the medical expenses that, we're filing 2021 tax return, and it's not a good idea to deduct 2022 medical insurance into your prior year tax return. So stay within the years. All right. And there are things paid through the flexible spending account and also the health saving account. These expenses, like you paid out of there, they are not deductible again because the money in this account, you didn't pay taxes. Even though it is coming out of your paycheck, because let's say you got $1,000 paycheck, but you put $500 into flexible saving account, and you didn't pay taxes on that 500, so your taxable income reduced from 1,000 to 500. So the other 500 went into a different account. So you're spending out of there. That is not deductible again because you didn't pay income tax already on there. Okay, whose medical dental expense can you include in Schedule A? Very interesting question. I will tell you that it probably came to our firm, to me, literally every year. Every year we would have people ask that question. Of course, not your puppies, okay? Your puppy is not your dependent. They don't have a social security number. I have a Peanut, and I really love Peanut to death, but if I take him to doctor, he cost me, and I cannot deduct out of my taxes, period. So same thing, that excluding your Peanut. So Peanut doesn't include, and Bean, I know a dog, Bean, cannot deduct, cannot include, and a Recall and Ella, all of these dogs I know. No, you cannot be part of the medical deduction. So if you have a bird and cat, they belong to the same category? No, right? But who can deduct? Yourself and your spouse, all dependents you claim on your return. And your children whom you didn't claim as a dependent because of the rules for children of divorced or separated parents. See? If you are the one paid your children medical expense, but this year the children is not your dependent, is your ex-spouse dependent because you paid for it, so you can deduct it. All right. Any person you could have claimed as dependent on your return, except that person received $4,300 as an income or more of the income, and or filed a joint return with somebody else. But you could have claimed that person as dependent. If that's the case, and you spend money on the medical insurance, yes, you can claim. Any person you could have claimed as dependent, except that you or your spouse, if filing jointly, can be claimed as a dependent on someone else's 2021 return. Which means what? Which means that if someone can be claimed as a joint return with another person, let's say you have a kid and just married very early, and so becoming a spouse to another return, even though this kid could be your dependent, and you cannot claim the medical expense anymore because it's a joint return on the other side. All right, example, you provided over half of your mom's support, but cannot claim her as a dependent because she has her own income. And you can include any medical, dental expenses you paid in 2021 for your mom on your Schedule A. Got it? Right? All right. If I do not plan to take itemized deduction, do I need to give my tax preparer all the data like medical expense, property tax, home or mortgage interest, charity donation? The answer is a very big fat yes. And especially for those folks who file state tax return. In some states, they don't file a state income tax return. So that's not an avoid question. And for those who are in Midwest, like where our branch is, right? We're in Iowa, California, and Minnesota. So all of these states has a state taxes. So the answer is a big fat yes, because even though you got a standard deduction, you don't need to break them down, but a prudent tax preparer would still break it down for you into Schedule A, because it will become a calculation for your state. The state might give you an itemized deduction, so you would have more deduction at the state side. Okay, so that is a very good question, and I hope you got our big yes on that. Make sure you still do that. All right, this is a very interesting question. It is also very useful for this half an hour we are together. And what about you are a business owner and you run a partnership, and what happens to your medical insurance? Okay, if you are a 1065 partner, we're talking about 1065 is the tax form, right? It's partnership tax form. That medical insurance you're paying for yourself will be treated as a guaranteed payment. I'll leave it that way. I'll show you something. And it will be reported on K1. You know what K1 is. If you have 1065, you know that, right? So it will be reported as a guaranteed payment, and it will be showing up on the K1, and it will make you pay self-employment tax on your 1040. Okay? See, I just said that will make you pay self-employment tax, because when you have a partnership, if you are a general partner, you work in the partnership, and you don't really need to run a payroll for yourself. You don't run W-2. You actually just going to get K1, pay self-employment tax. But this medical insurance you're paying for yourself, let's say that is $2,500. That one will be your guaranteed payment, and it will be paying self-employment tax when they arrive in your 1040, and then you can deduct it out of line 17, Schedule 1. Let me show you what I'm talking about. So this is the 1065 K1 with medical insurance of $2,500. You see that? 1065. So your business made $3,000 income, but you paid $2,500 on your own medical insurance premium. So you're going to treat that as your guaranteed payment. All right. So after you did that, what happened to your taxes? So you will include the 3,000 as your income, you will include 2,500 as your income. So your total income from K1 from your partnership is what? 5,500. Okay, that's your total income. And then when you reported that on your 1040, you come to Schedule 1, Part 2, and then you're going to put 2,500 here to reduce that medical insurance from your income. So you report 5,500, then you come on down to reduce the 2,500. So your taxable income is what? 3,500. Make sense? Yeah. Am I too fast? You're good, right? If you have a partnership, you paid yourself, you're a partner, you're a member, you paid yourself medical insurance premium, you cannot just deduct out of the business and forget about it. No, you need to include that in the K1, as your guaranteed income. And then you need to come to your 1040 to reduce the medical premium away on Part 1, line 17. All right. Now you say, well, Ying, what about I have 1120S? Great question. Great question. So if you are a S corporation owner, you paid yourself medical insurance, and that medical insurance amount should be reported on W2, not on K1. It's on W2. On W2, we're using the same one, right? Same example. On W2, the 2,500 is in box 1. It's taxable income. It increases your box 1 taxable income, but it's not on box 3 and 5 because it is not subject to Social Security Medicare. All right. And it will not be subject to Social Security Medicare, and it will be treated as a deduction to reduce taxable income on 1040. Where are you going to reduce that? Listen to me, folks. You will come back here, reduce it in the same place. All right. But the only difference is that in 1120S, and you already included that in your W2. You already have the 2,500 on your W2 together with your other income. And then when you file taxes, you put your W2 on the 1040 and know that you're a self-employed individual. So you come into the Schedule 1, go to line 17, you reduce your medical expenses total. So that is how you're going to handle as you are a small business owner and you happen to be a K1. You get a K1 from 1065 and you are 1120S shareholder. So you got a K1 from K1 from 1120S, but your medical insurance, everything is dealt on your W2, not on the K1. All right. I think I am like right on the point because it is 2 minutes away from the end of it. And look, this is our contact information. And do you know that one of the things about our firm is that we actually regularly open on Saturday. Did you realize that? And you probably enjoy the convenience, but just never realize that we are regularly open on Saturday. Yes, on Saturday, we do have people in the office in Des Moines. So right now, our Saturday is not yet in the other branches, just because the other branches are actually smaller than the Des Moines total. So, but you know, it's definitely it's growing really fast. So I can tell that our Bloomington, Minnesota branch is just, you know, growing by leaps and bounds and really fast. We just moved into a new building in Bloomington to accommodating more people. And our new address in Bloomington is 8722 Lindale South and in Bloomington. It's actually, it's kind of a street more like in Des Moines. In Des Moines, we're on Ingersoll, right? Ingersoll is kind of a commercial street and commercial driven. Same thing as Lindale in Bloomington. It carries that same feelings with the surrounding as all businesses and restaurants, insurance companies and things like that. So I hope you got a chance to visit our Bloomington new office. And I really appreciate you to stay with me for this 30 minutes. I hope you learned something, and we will continue bringing useful information to lighten up your day, your tax day. Okay, other days we can't guarantee, but lighten up your tax days. Okay, bye-bye.